If you understand market structure, you will be able to know the next market movements. You will be able to understand on where to get perfect entries for you to ride any existing trend in your trading. Knowing market structure has made me a lot of profits, and in this video today, I will share with you on how to study or to understand the market structure clearly. So this is how a downtrend market moves. An impulse to the downside direction, a correction, an impulse, a correction, an impulse, a correction, an impulse. So the downtrend market always moves making series of lower lows and lower highs like this. So this is how a downtrend market moves in real markets. We can see on volatility index the market is on a downtrend direction. How is it moving? We can see that the market did form an impulse right here, a retest, an impulse, a correction, an impulse, a retest, an impulse, a retest, an impulse, a retest, an impulse, a retest, an impulse, a retest. So knowing how the downtrend market moves, it's clear that you could have got an entry for you on this trade on these zones right here. But let me give you a confirmation for you to use when riding these kinds of trends. First of all, you have to make sure when the market retests this level, it gives you candlesticks with weak rejections, just like this. We can see here we did have this doji candlestick as our reversal. So guys and girls, this is in a very short summary how the market structure moves in a downtrend direction. So in a downtrend direction, how can you know that this market right now has broken this downtrend direction and we should not look for sales anymore and we should look only for buys trades? So I've been telling you in all of my videos that for a downtrend market to be over, then the previous lower high has to be broken. So we can see right now that this market is clearly on this level. Now if it breaks by leaving a full body candlestick, then this downtrend market can be technically termed as to be officially over. An extra point to put into consideration when studying this market structure is you should use these line graphs, because on the line graphs you won't see any weak rejections. So I can confidently say that when you put the market to a line graph, then you'll have a very clear market structure with no any manipulations or weak rejections from the candlestick being visible. But when doing analysis, always use the candlestick graphs and not line graphs. So right now, let us go to the uptrend directions so that we can see how the uptrend market moves, so that we can get to know the market structure in an uptrend direction. So an uptrend market moves in series of higher highs and higher lows. We can see here making an impulsive move to the uptrend direction, forming a new higher high, a retest to form a new higher low, an impulse, a retest, an impulse, a retest, an impulse. So this is how an uptrend market moves. To get entries on this kind of movements is you should just wait for the market to retest to any of these previous levels or previous zones. Now this is just a general theory that you should know when coming to trade uptrend markets in your charts. Now let us go to the real market so that we can study exactly how an uptrend market moves in real markets. In the real markets, this is how an uptrend market moves sometimes. We can see right here, we did have this impressive move to the uptrend direction, a retest, an impressive move, a retest, an impressive move, a retest, an impressive move, a retest, then an impressive move right here. So you can observe, you can see just how this uptrend market has been moving. We can see when the market did break this previous higher high, the market did not come all the way to retest this level. So as an intelligent and patient trader, what you could have done on this kind of trade is leave this trade alone, because the market did not come fully to this level right here to retest before bouncing to the uptrend direction. And we can see when the market did break this newly formed higher high, again the market did not come all the way to this direction, okay, all the way to this level right here before going to the uptrend direction. Now again, we can see when the market did break this previous higher high, it did come all the way to this level before going to the uptrend direction. Now sticking to your strategy, it is very important, because this kind of movement rarely happens on the market. So if you change the way you intend these trades every now and then you could find yourself losing significant amounts of money, because the market has to come to these levels before going to the uptrend direction. Now our confirmations when the market comes to these levels is always the same, either a doji candlestick to show us a reversal, or the formation of candlestick multiple wick rejections, just like this. Now you can see that the real markets are completely different from what you see on the textbooks or on any trading articles online, and that's why it is always crucial for you to keep practicing daily in and out, because with experience and time you'll find this kind of movements just very simple for you to spot in. Guys and girls, thank you for watching this video. I'll be uploading these kinds of videos almost daily, so subscribe to this channel and turn the notification bell icon on so that you never miss any of my future uploads. If you haven't joined my Telegram group, where I'll be posting regularly my analysis so that we can catch some trades together live when they occur at the exact moments in the markets, then please use the link in the description below for you to join into my Telegram channel. Do not go on the Telegram and search for Forex Clubhouse, because if you do that, you'll just find with the groups of people impersonating to be me, and they will scam your money away. So be careful out there, guys. Just use the link in the description below for you to join my Telegram group, which it is free. Bye bye.